All right, welcome out to today's advisory report. It is Friday, June 5th, and a brutal day in the market. You can see some of our gauges have now changed to a more neutral, uncertain condition. The intermediate trend still looks very bullish, and we have gone to a bearish short-term trend with price cracking below the 20-day moving average. We've been mentioning this in our videos that's what we're going to be looking at to see if buyers hold up and come in. And they did not. It was pretty much a straight sell all day. And in response, we took some defense based off of the idea that it's short term and we may have a little bit more need for defense. Like I said, the intermediate trend is still bullish. So there's no reason to get too crazy right now. S&P 500 looks like it was down about just over 2.5%. That's a pretty big down day. We'll look at the charts in a second, but we've taken some appropriate action inside of our strategies. You can see that our offense in each one of these strategies has been reduced. So now we'll see if we have some continued selling pressure, if we just hold our defensive measure, if we take more defensive, or if this was just a end of the week, I don't want to hold stuff over the weekend, so I'm selling it all, and they start buying it back up on Monday. If they do, then we'll look for specific points to get back more exposure. So, but right now we're positioned to for a little bit more downside possibly. So let's go ahead over to the charts. We'll start with this intermediate trend. This is a weekly chart. We're looking to see if price will stay over the 30-week moving average. I'm just going to zoom in a lot, and it is definitely. So this little blip that we had today that will look a lot worse on the short-term chart is barely anything if you really look at this intermediate chart. So we're still bullish biased in the intermediate term, but like I said, we did take some defense appropriately. You know, some of this is based off of how extended the market was over the 50-day moving average. My somewhat expectation, there's a couple levels that we're looking at. You can see right here, this is today's action. You can see this is the biggest down day, even if you compare it to like all the up days and the down days on this run, visually at least. So in the short term, you can notice a little bit of red behind down here. We're kind of thinking maybe we might have some more short term decline. We're going to be looking at this level right here, which was on the 19th of May, to see if we get some support. If we don't get it there, we might be coming all the way down to this spot. By the way, completely normal, right? You have a big run up like this, you have to expect some pullback. So we'll kind of see what happens, and we'll take it day by day. Bonds also not the best of price action. Since that rejection that we noticed, we've continued down. So bonds down, yields up is usually the inverse relationship. So let's go ahead and look at some of the stocks we have left in our ultra aggressive. We did do quite a bit of selling, which some of it was defensive. And when I say defensive selling, it means they hit our stops. When I say offensive selling, it means we made some money, we're taking some profits, right? So we have Twilio still in the ultra aggressive. Actually, not a bad looking day when you look at it. Traded within the range of yesterday. So we'll see how that plays out. We kept Doc in, even though this was a kind of not the best, funnest day, but it did gain some support and close higher. We have that one still. We have a little bit of Marvell. If you remember yesterday, we cleaned some of this out to a very small position. So that position was down, but it's a much smaller position. We sold the rest of MU today. So let's see if I can bring up MU really quick. We sold it early in the day, so up in this area, and it sold off the rest of the day. We trimmed our XLK. So we lowered our amount that we have of this one. We'll see if this gains some support in this area and turns back up. And that's basically, we have the S&P 500 left. We had the double S&P. We got out of that one. So that's pretty much what we have left in the portfolio. Have a wonderful weekend. Take care. We'll be right back at it on Monday.